Thank you, Cheryl. Joining me right now is Georgia Congressman and member of the House Budget and Energy and Commerce Committees, Earl Buddy Carter, former CKE Restaurant CEO and Heritage Foundation Senior Fellow, Andy Puzder. Also still with me, Larry McDonald, Adam Johnson, Cheryl Casoni. Thanks, everybody, for being here as we get into these numbers. To me, it looks like either better than expected or in line. How do you read this, Adam Johnson?
Better than expected or in line. That's it. And that's good news. And that's why the market is up. And there's another piece of good news. Cheryl mentioned that. And that is that 70% of the increase was related to shelter and gasoline. Why is that good news? Because 30% of CPI, the Consumer Price Index, is linked to housing and shelter costs. So as that comes down, and housing costs have been very sticky, as that finally breaks, maybe that's what gets us the last mile down towards 2%. We're not going to CPI 2% anytime soon, but that might be the key that starts to bring it under 3%, and that would be wonderful news. You
know, Andy Puzder, I want you to weigh in here because Cheryl just reported about food at home versus food away. Look, restaurants are swallowing a lot of this, and they're passing on higher prices to consumers. Maybe it didn't happen this month as significant, but you've got that situation underway. I mean, Red Lobster is liquidating stores. We're talking about bankruptcy throughout the restaurant industry. How would you assess things, Andy?
Well, I mean, it's good news that we were down 0.2% for families. I mean, that obviously that's huge. They can go out and eat maybe a little more. But the reality is, restaurants are in trouble, and this is not something we're going to see consistently going forward because they're going to have to raise prices to survive. You can't survive in an environment like this and have your prices come down. Wages are surging. You've got these huge minimum wage increases. In addition to economic pressure, you've seen commodities go way up. It's ugly out there if you're running a restaurant. Although, as I said, I think this month was a little bit of good news, and food in general wasn't up. We'll wait and see what happens over the next couple of months. We're still looking at numbers that, nobody's mentioned this yet, but we're still looking at numbers as enthusiastic as everybody is on the market. They're still way over 2%, which is obviously the Fed's target number. We're still talking about numbers kind of into that 3 to 4% range, where we seem to be jumping up and down between 3 and 4%. And until we see that change significantly, I don't see this having a major impact on families.
Yeah, it's a good point, because even though this was on a month-to-month basis up 0.3%, better than the expected 0.4%, year over year it's the same, 3.4%, and you got a market rallying right now. Okay, the Dow Industrial's up 166 points right now, Larry McDonald, as if, oh well, this report gives us free rein to perhaps see rate cuts. Your thoughts? Assess this story for us.
Well, what happens is the last 2 years there's been a lot of nasty inflation prints. So a lot of hedge funds will short the market, put on hedges into the number. And as Adam said, the number comes in okay, kind of wishy-washy either way, and then they immediately will cover on the news, and you get this kind of bounce. I mean, you got to think about traders here. This is how the market works. People are covering on the news because the news isn't as bad as expectations. But if you look beneath the surface, wheat this week, orange juice, corn, copper, the bottom line is this data is backward looking. All I know is since this data was recorded over the last month, commodity prices are ripping higher. That means next month we're probably going to have a headline problem on inflation.
Oh, that's a very good point, because copper has been at all-time highs. Oil still remains elevated. I mean, if you start seeing that show up in the numbers, we're going to see that first, though, on the PPI, right?
Yeah, it'll show up, first in the PPI, then the CPI. And PPI, as Adam said, he makes a good point. The revisions yesterday were very warm. In other words, very helpful for the market, but the headline number was pretty nasty. And so there's all this noise. At the end of the day, though, we're normalizing at 3 to 4% inflation. The Fed's target's 2%. And if that's the case, there's trillions of dollars that are misallocated. And remember, the last thing I'll say, the response to the Lehman crisis was a $4 trillion fiscal and monetary. The response to COVID and the banking crisis this time around is $16 trillion. And inflation just doesn't normalize after a $16 trillion fiscal and monetary response inside 4 years. Let's get serious.
Congressman Buddy Carter, what role can you play here in reining in inflation? I mean, look, let's take a step back and look at this from 30,000 feet. Inflation is up almost 20%. under Joe Biden since he walked into the Oval Office, largely because of all of the spending. You all have passed lots of legislation, from the Fiscal Responsibility Act to the Inflation Reduction Act to the CHIPS Act and beyond. $7 trillion later, we hit 40-year highs in inflation, even though President Biden can't seem to remember what the inflation rate was when he walked in. It was 1.4%.
That's exactly right. Look, I'm glad the numbers are what they are. I'm excited, just as everybody seems to be, but I hate to be a Debbie Downer, but I got to tell you, if this administration continues with their regulations and what they are trying to push, we are going to see a downturn in our economy. And in less than an hour, we will have a hearing with the EPA administrator on the subcommittee that I chair. We're going to bring him in there and we're going to grill him about all these regulations that the administration is trying to pass. Over 140, thus far 60 of them have been signed into law, costing American taxpayers $1.2 trillion.
Yeah.
If they continue on this track, then we're going to see a downturn in our economy again.
That's a great point, Cheryl. You know, these kinds of things don't show up in the numbers, right? All the regulatory burdens out there for small business, and you don't see that in an inflation number, and you don't necessarily go back to that. But that's part of the story, whether it's spending or whether it's regulation around the climate change agenda. That's just bad policy that has taken us and taken this economy to where it is.
I'm glad that you mentioned the Red Lobster bankruptcy, because look at what's happening out in California with the minimum wage situation for fast food chains. And those fast food chains are saying we're going to either have to cut jobs or raise prices. And ultimately, they end up raising prices. Restaurants, even just, family-owned restaurants, and we've had many guests on the program that have told us that their input costs, and that was PPI yesterday, are very problematic. The other point I want to make, and I'm so glad that this got brought up, and I'm sorry I forgot who did it, but it was about the energy story. Because remember, the big piece of PPI that was hotter than expected yesterday was gasoline prices. That was 3.6% off the top of my head. Look, that's the input cost for PPI. That's going to show up in CPI. And again, I made the point yesterday as we go into the summer driving season. So, I always call PPI the entree to the main course, which is CPI. And I don't think it's a good story. And so, the markets are kind of backing off, I think, also to the point that, look, these are still high numbers. 3.6% is still high on a core basis.
Yeah. It's a great point, and I want to get back to that regulatory conversation with you, Andy. But first, Larry, this issue of gasoline that Cheryl's talking about came up in your calls this week when you spoke with institutions, and you say that it's extremely clear Powell hiked rates aggressively from March 23 to July 24. But since then, working closely with Janet Yellen and the Treasury, they've aggressively eased financial conditions through a whole collection of backdoor bag of tricks. Is that what happened with oil?
I'm telling you, it's not election rigging, but presidential administrations do this. Bush, McCain in 2008, they downplayed the recession that year. All politicians do it. So as investors, we're going to be fed a lot of baloney on inflation. But at the end of the day, if you look at what Powell and Yellen are doing together, they're massively stimulating. Yellen's issuing all these treasuries on the front end. Right now, there's $8.2 trillion of treasuries due this year, and the next 2 years, it's $11 trillion. So in other words, they're front end loading the treasuries to try to juice liquidity in the market. And it's complex, but there's a bag of tricks, and they're using them.
Well, that's exactly what Scott Bessent told us the other day, that the way she's doing the auctions, short-term versus long-term, is basically keeping stocks high and rates down. And she's doing this specifically so that the market looks good going into the election. Andy Puzder, what do you think about that? And what about your average restaurant out there and what Cheryl brings up and all the regulatory changes that we've seen? Red Lobster going bankrupt and worries, you just said a minute ago, restaurants are not in good shape.
No, and Red Lobster won't be the last brand you see suffering major problems. There's going to be pain across the sector because you can see it in the jobs numbers. If you look at the jobs numbers over the past year, all of the jobs, we've added no full-time jobs. We've added only part-time jobs, and they've all gone to people that are here, that are immigrants, whether they're here legally or illegally, they're immigrants. Right. So what you're seeing is that lower level of hiring. The entry-level jobs are going to immigrants who work less expensively, and you're seeing part-time jobs where people don't have to pay for Obamacare. You keep your employee under 30 hours, you save a little money there. People are these regulatory policies and these state laws with respect to minimum wage are affecting the entire economy in ways that they don't contemplate. These are the unanticipated consequences of this kind of regulatory regime. And you're seeing that it's hurting the jobs market. It's going to hurt wages. It's going to hurt. It's going to affect inflation. It's going to affect what families can afford. This is devastating.
Adam, what's most important to you?
Well, regulation is a stranglehold on the economy. And curiously, the market may actually be predicting that we're getting away from that. And I'll tell you why. Morgan Stanley has two baskets. One is a sort of GOP wins basket, and the other is a Democrat wins basket. And the GOP basket has been pulling ahead significantly from the Democratic basket over the past 7 weeks. I think that's the market's way of saying that we're going to have a Trump victory in November. And the reason why the stock market would outperform under a Trump scenario is exactly what we're talking about. Fewer regulations. Get government out of the way. Let business people do what they do best, which is to grow their businesses and create profits. It goes back to Ronald Reagan, the 9 most dangerous words in the English language. We're from the government and we're here to help.
Right.
Get them out of the way. Get government out of the way. And the market's saying that may happen.
That's not what this administration wants to do, Buddy Carter.
No, it's not. And look, just one example. I have the largest economic development project in the history of the state of Georgia coming to my district. It's an EV manufacturing plant. Now, the administration has passed and trying to promulgate rules right now for particulate matter 2.5, where they don't want any industry that's coming in to surpass 9, the level of 9. Well, the background level is already at 8. If this project that's coming into my district, the largest economic development project in the history of our state, if it were to be applied for today, it would not be approved. Fortunately, it was applied for before this went into effect. And this is going to impact over 80% of the counties in our country, because their base load, the base load number is already at 8. And if they have to add 1 or 2, then they'll surpass the 9.
Well, look, let's not forget, Larry, we're in the middle of earnings season, and for the most part, earnings have been better than expected, despite what anybody believes about this macro story here. But you got the Dow Industrial's up 140 points right now. Got another major rally in the NASDAQ this morning, perhaps on this CPI number, but also perhaps on growth stories that we're getting out of the earnings season. How do you see the earnings season, Larry?
Well, it's interesting, Maria. Companies that face the bottom 60% of consumers, Expedia had a huge miss, Home Depot, huge miss. The divergence between, say, Delta Airlines and Expedia is like something we've never seen before. And Delta faces, remember, business travelers. Business travelers, if you have $5 million in a money market fund, Jay Powell gave you a 300% pay raise the last 2-3 years. And so business travelers with money, wealthy people, are spending, but the bottom 60% are being hammered. And that's why you saw Burberry this morning. Any company that faces the bottom 60%. So I think we're going to continue to see companies miss earnings, consumer-facing companies, and companies that face higher income consumers, companies like American Express, are killing it. The divergence between American Express, Maria, and Capital One is literally at COVID levels. Mind-blowing. Capital One feeds into the lower 60%. American Express feeds into the top 20%.
Well, we should point out that Jay Powell removed that line out of his statement a couple of meetings ago that said the banking sector is sound. Okay, he took that out of the commentary, and we're still having questions this morning on a New York Bank today, which of course just did a deal with J.P. Morgan. So we're still watching the banking sector for sort of holes in the broader economy. But Cheryl, I wonder how you feel about the reaction to this report. I think markets needed better better than this. I think markets needed a bigger signal to say, yeah, inflation is getting under control. But let's go back for a second. We had 3 hot months. We had January, February, and March, all elevated inflation, hotter than expected. So here we have April, and you reported a minute ago that it was month to month better than expected, up 0.3 versus up 0.4. Year over year, same thing, 3.4% versus an estimate of 3.4%. Is that it? That sends the Dow Industrials up 150 points. I'm not buying it. And if I were in Adam's shoes, I would be a seller of this right here. What do you say?
I agree with you. And I think that, look, the market isn't even open yet. And I'm wondering what the close is going to look like versus what the open is going to look like.
That's my point.
Yeah, exactly. And I have a feeling that this might be a one-off for the month of April. So I'm in the camp that, and I was listening. It was funny. I was listening to Stephanie Pomboy yesterday. But the favorite line I heard about earnings was Amazon is not a consumer products company. It's a web services company.
It's
but
a cloud
anyway,
company. Yeah, it's a cloud company. Yeah.
Stuck in my head. But and that's where the market has been really gaining is technology, and there are other sectors that are powering the market, but it's not the consumer names that we know. Guys, we're getting Walmart tomorrow.
Yes.
I think Walmart might be a game changer. I mean, there's so much buzz about that earnings report tomorrow because that gives you the real nuts and bolts on the ground story of what's happening for a massive retailer like Walmart, but who also is in now the grocery business.
Yeah, but Cheryl, that's going to be a beneficiary, I think, because everybody's trying to trade down. They want to get the dollar stores. They want to get cheaper stuff. So Walmart's been benefiting from all of this pressure.
It will.
And
it will.
stress in retail.
But my point is that report is going to show you what consumers are really, really doing, and they are going for cheap.
Yeah.
They are going to Walmart for groceries. They're opening up more grocery-type stores now because that's where they're making all of their money. Fair enough. But again, I will say, I think this is a one-off. I think when May CPI comes out, I think the story is going to reverse. I'm only going off the data year to date. Yeah, kind of how I look at it.
Yeah, I agree with you. Walmart is one to watch, and then Nvidia. Those are the two biggies coming up in the upcoming week. Walmart tomorrow and Nvidia next Wednesday on the 22nd. Adam, humor me here for a second. Shouldn't we have gotten a better number here in order to justify this huge rally in stocks? I mean, this is not so great. 3.4% inflation.
Well, a couple of points. Number one, I think Larry made a very good point. You have to look at the positioning going into it. And there were so many shorts, I would wager, that were put on ahead of this number in case it were a hot number, that now the shorts have to cover. And that may be why we're up. It may be a short-term.
Well, that's a different story.
Yes, that may be a short-term thing. But I would also make the argument that, remember, yesterday, PPI was largely in line, producer prices largely in line, and they revised the previous month down a lot by 3 to 0.4%. And if you remember, it was that report about 6 weeks ago that got everybody all upset.
Yeah.
So the fact that PPI came in line, they revised the previous month down. Today we get a CPI that is, for the most part, in line. One of the numbers of the four was a little bit better. That to me sort of says, well, maybe this 3-month uptick in inflation that we've been dealing with, that you just mentioned, January, February, March, maybe that uptick is over. It doesn't mean inflation's going down. It doesn't mean the Fed's going to cut rates. But remember, markets like certainty, and markets sniff out trends and changes. So if the 3-month bump that we've seen in inflation is now over and at least just going to hold steady, maybe even come down, that in of itself is good news.
Yeah, Buddy Carter, what's your take on this breaking news that we have this morning and the fact that Joe Biden is trying to blow off the debate commission and says that he wants a debate before early voting starts with Trump? He says it's not going to be the traditional debate like the commission will handle. It will be more of a private situation, mano a mano here. What do you think about that? He says he wants a debate in June and September.
And I think that's ridiculous. In June, people are going to have forgotten about it by the time it comes for the election in November. So, it should start in August.
So that's
least,
okay.
at the latest.
So you think they're trying to do it earlier?
But nevertheless,
okay. June is too early, you feel?
This is an example of Joe Biden, who is obviously struggling right now. Look, all the numbers today, I'm excited too. I'm glad that inflation is petering off, if you will. But at the same time, people are still hurting. Inflation's up almost 20%. Real wages are down almost 4%.
Yeah.
People are hurting out there. Food is more expensive. Energy's more expensive. Housing's more expensive. People vote with their pocketbooks. And that's what's got everyone so upset right now is the economy. That and the border. Those are the top two issues in my district and I think across America.
And when you look at the economy issues, Andy, it is about regulation. What are some of the specific regulations that you can tell us about, Andy, that are connected to the Biden agenda, which of course is the climate change agenda, that seem to be egregious for some small business?
Well, I say one other thing I'd mention in addition to regulations is if Republicans retake the House, the Senate, and the presidency, we're also going to see the Trump tax cuts, the Tax Cuts and Jobs Act re-upped. So we're not going to see a big tax increase come 2025. So this is something that also significantly affects business. But the climate change agenda is huge. I'm glad you brought it up because it's driving up the cost of energy. And when you drive up the cost of energy, you drive up the cost of transporting everything. It's not only just heating and cooling. It's just getting food to a restaurant costs a whole lot more than it did before energy prices went up. So these are big numbers. I'd add to what Buddy said. You really. It's not just the market that we need to look to here, because I think the Biden administration is looking towards voters. And if you're going to impact voters, you're going to have a few months of pretty good numbers to see seeing things come down and come back to them. They're not going to go and jump, because there's a 0.1% move in over month numbers, or even a % move in the general inflationary numbers until they start seeing at the gas pump and in the grocery store. That their costs are coming down. They're not going to change their opinion of Biden or how he's handling the economy. So the regulatory, the tax, and just the numbers in general, the impact on consumers should have a huge effect come November. And if they don't do something quick, it's going to have a devastating effect. By the way, they might want to have the debates in June. They might want to have the debates before Biden is officially the nominee. He's now the presumptive nominee. Because if they don't like how he performs in the debates, it'll give him a chance to pick somebody else.
So you think that's the thinking on the Democrat side. Larry, what drives...
I don't know if it's Biden's thinking, but I'll bet it's the thinking of the people that they're trying to set up the debate.
Well, we'll see. I mean, look, we watch him, in plain sight every day, and clearly there are issues. We know that, and I think Democrats know that pretty clearly as well. But Larry, what drives this market now, rest of the year? Is it all about the Fed? Do we have any new signals out of this CPI number as far as what the Fed does?
Well, one of the biggest signals out there, and I find this like a mind-blowing, right? So the consumer discretionary ETF, the XLY, is down on the year, right? And it's being outperformed by consumer staples. And all that means in English is recession-proof stocks, your Cloroxes, your big Colgates, those types of stocks are in the XLP, the staples. The staples are dramatically outperforming consumer discretionary stocks like Starbucks and companies that face consumers. And so I think the markets are speaking there, how to listen when markets speak. The other thing, we got to remember, 5, 6 years ago, people were moaning and groaning about these Trump tariffs every single day, right? You remember how the media, the drama.
I do.
Like how because tariffs are inflationary. They were screaming at us every day. And yesterday, Biden just put forth more aggressive tariffs than Trump, and the media's crickets.
Right.
Why is that?
Well, why do you think it is? They get the directive from the White House and they go with it.
I thought we were supposed to report the news, right? I mean, tariffs are inflationary.
Yeah. Well, look, now they're fighting on who's tougher, but Joe Biden hasn't done squat to stop China's bad behavior since he walked in the Oval Office. Now we're right ahead of an election, so I guess he had to do something. We'll see if that materializes. But I want to thank everybody for this great conversation on inflation. Congressman Earl, Buddy Carter, Andy Puzder, Larry McDonald, Adam Johnson, Cheryl Casoni, thank you so much for a great conversation.